Hi everyone, let's go over my bullish and bearish Elliott wave scenarios of Bitcoin, starting with the bullish scenario on the weekly time frame, where we're looking for an impulse to the upside, 1, 2, 3, 4, and then a final wave 5 to the upside. The common target area for your wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of your wave 3, giving you a target area between 57.1k and 42.8k, with the invalidation being the 0.618 at 37.7k. Preferably, this wave 4 is finishing after the 1-to-1 fib time, which is taken from the start to the end of wave 2 to the end of wave 3, comparing wave 2 in time with wave 4 in time, and most commonly a wave 4 is longer in time than a wave 2, so therefore preferably we see wave 4 finish after the 1-to-1, which is the 12th of August. An important target for this wave 4 in yellow is this wave 4 price action in green, as a wave 4 of a higher degree, being the yellow wave 4, tends to retrace to the price action of wave 4 of a lower degree, which is the white box that I selected now, which gives you a target between 49.1k and 38.5k. We then look for more local signs of strength, as we want to see another final impulsive move towards the upside to new all-time highs for our wave 5. If we look at the trend channel, the probabilities have now also increased that we are looking for our wave 4. This channel is taken from the high here to the all-time high to the low here on the chart. If we are looking for wave 3 to finish, we preferably break this channel, which we are doing right now, increasing probabilities for a wave 4 and a finished wave 3. And the next leg up, higher probabilities, we are looking for a wave 5. So everything going according to plan. On the daily time frame, the highest probability scenario here is a zigzag to the downside, where we then have a leading diagonal in the wave A, looking for a complex WXY inside wave B, and then a final wave C towards the downside. The common target for your wave C is between the 1 and the 1.618 trend-based fib extension, taken from the start to the end of A to the end of B, giving you a target between 52.6k and 41.9k. The most common target for C is between the 1 and the 1.236, 52.6k to 48.5k. The bearish scenario on the weekly time frame is a bigger regular flat or a WXY. By all means, the price action is relatively simple. We are looking for a wave A or W, 3-wave corrective structure that is finished in a B or X, and a bigger move to the downside in either a wave Y or a wave C. The difference between the ABC, the yellow count, which is a regular flat ABC, compared to a WXY is that the minimum target for wave C generally is the low of your wave A, moving below 15.4k, and in the WXY we are looking for a target, a minimum target, that is a lot higher, 30.4k. Now what you're seeing here is that this latest move towards the upside is then counted as a WXY, a double zigzag, WX, very shallow X here, 0.236 to the 0.382 Fibonacci, and then a final 3-wave ABC to the upside in wave Y. Has to be said that a wave B moving to the 1 to the 105 Fibonacci, taken from the high to the low of A, is less common because this is a regular flat target, and the most common flat structure is an expanding flat where your wave B moves higher to the 1.236 to the 1.38, which is around 100k. So it does lower the probabilities a bit for the flat scenario, and in a WXY it is not too common that a wave X actually takes the high of the origin of your wave W. So something we have to keep in mind. The probabilities for this scenario, however, only really increase if we start to move below 38.5k, which then also gets us close, of course, to the invalidation of the bullish scenario. On the daily time frame, the most bearish scenario here is a 1-2, where we have a wave 1 in a leading diagonal. We have a wave 2 and look for a bigger wave 3 towards the downside, where you do want to see that 38.5k level broken. What, however, lowers the probabilities for this scenario is that your wave 2 has hit the 886, taken from the start to the end of your wave 1. And the 886 is a rare target for a wave 2, common for a wave B or a wave X, which therefore increases the probabilities that any structures later towards the downside here are wave C's or wave Y's, which therefore increases the probabilities to sooner or later move back towards the upside. So to summarize, 886 rare for 2, common for B or X, increasing the probabilities that this is corrective price action, and therefore it increases the probabilities to sooner or later move back up and take out the all-time high once again. Of course, that then also in turn increases probabilities for the weekly bullish scenario. On the weekly time frame, we have this volume profile. We had this one on the chart already for a very long time. Even when we started moving up from 15k, it was then acting as resistance. It's a volume profile taken from the range here, 2021 and partly 2022, with the value area high, point of control value area low. Nicely respected, as you can see. Resistance here at the value area low, moving to the value area high, point of control breakout, and now we are back here at the value area high. Preferably you do see at least a reaction here, which is what we see at the moment, and we don't want to move all the way down to the point of control. So what we don't want to see here is price re-entering this volume profile, get back to the value area high, retest and break the structure towards the point of control, because the point of control at 38.7k is close to the invalidation of the bull market, the 0.618, 37.7k, and will also increase probabilities for a more bearish scenario to lower prices, where then the probabilities are higher. We are going to move to the lower side of this volume profile, where you can see the 0.618 is in confluence in the bearish market scenario with the value area low at about 30k. More locally, on the 4-hour time frame, we have moved towards the downside, and what you can see here is that the volume has been increasing, the last two candles containing the highest amount of volume. From an Elliott wave point of view, it is therefore best to wait for a range to form. Of course, no financial advice, do what you want to do, but from an Elliott wave point of view, most commonly a wave 3 has the highest amount of volume, and you still expect a range to form and another drop to the downside to take the lows at least once more, as most commonly the highest amount of volume again is in a wave 3 and still a wave 4 and 5 to come. But it makes sense to wait for a range, let price do its thing, and then when a new range forms, it will give us all the information that we need to come up with some new great local trading scenarios. When we look at the CVD divergences, then this is what happened during the move to the downside. Now, I am personally a reactive trader, and when I see this, I had no interest in looking for long positions, as you can imagine, because what you see here is the red lines are bearish CVD divergences and the green ones are bullish CVD divergences, which means that the bearish CVD divergences, market longs are being absorbed by limit short orders. Since the high at 70k, all the bearish CVDs have played out, and every bounce that we had bearish CVD divergences as well, right? So price moving down and down and down with bearish CVDs consistently. Even here, the latest move to the downside, bearish CVD divergences. So with a potential new range forming, please keep an eye on the CVD divergences. Very important when in a bit of a trending environment. We also have some news today, Monday, August 5 at 4 p.m. So make sure you trade safe around that hour. It might increase the volatility. Not that we miss any volatility at the moment, because it is already very volatile. So it might be quite a patient remainder of the day, like a more sideways structure because of the volume we had overnight for me, Central European time. But at least we do have here some news on Monday, today, and also next week is then 2:30 p.m., but that's still a week away. If we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities remain bullish. For the bearish scenario to increase in probabilities, we need at least 38.5k taken. What we are looking for locally is what we want to see in a wave 4 as well. I spoke about the trend channel, which is broken, something we like to see. Spoke about the ABC, where we are looking now for wave C to end somewhere in this target area here as well. And only if you really break 38.5k can we say, okay, bear market has the highest probability. On the daily time frame, the bullish scenario also has a higher probability compared to the bearish scenario, meaning the zigzag ABC compared to a wave 1-2, and that is mainly because your wave 2 hit the 886, rare for 2, common for B or X, increasing probabilities any move down is C or Y, or at least corrective, increasing the probabilities to sooner or later still move up and take out the high. And on the more 4-hour time frame, to add this to the probabilities are higher to wait for a range to form and then see one more drop, as currently the final move to the downside here is on the highest amount of volume, typically for a wave 3. So that would increase probabilities to at least, if wait patiently for a range to form, look for one more drop to look for a wave 4 and then a wave 5 to the downside, which can then finish your wave C in the bullish scenario. But later today I will be live on YouTube and we can cover this move towards the downside in a bit more detail and observe what happens locally the rest of the day. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.